Hello, and thank you for watching. My name is Rachel Barnett with Gentle Frog. I'm here to create videos for you to help you understand QuickBooks slightly better than you currently do. If you have any comments, questions, or suggestions, please put them in the chat box. Thank you.
Hello and welcome. Can you tell me and anybody watching a little bit about yourself? Like, what do you do? Who do you do it for? And I noticed you offer some things outside of bookkeeping, so I'd love it if you could talk about that for a moment.
Sure. Hi, everybody. My name is Noemi Jackson. I was raised and born in Rio de Janeiro, Brazil. I've been in the United States for a couple of years now, since I was 16. I started the Jackson Bookkeeping and Accounting last year. It was something that was already in my heart for a couple of years, but coming to the conclusion that, hey, that's the lane that I would like to do. But my main focus and vision has been always to help small business owners to be able to get a grasp of their finances and be able to make decisions based on what they see and understand. Because sometimes if you give a small business owner like a balance sheet or a profit and loss statement report, it's like, okay, what I'm looking at is a bunch of numbers. So just making sense of the numbers, that's my vision. To clarify things so they can, okay, if I'm spending too much on a particular area, maybe I can cut back or I can replace it in a way that will be beneficial for my business. So financial growth, financial literacy, and financial understanding, that's what we're all about. I'm located in Georgia. I serve as, I'm a remote bookkeeper. Most of my clients right now are local, meaning in my state. But my desire is to be able to reach out to others as well. We offer not only your bookkeeping cleanup and catch up and set up. I'm still now working on being able to offer the bookkeeping training, and that's when getting to know people as yourself allow me to get a better grasp of my skill and to improve. But one of the things that I'm trying to show those that may just have a smaller level of their business that they can do themselves if they desire is that I offer digital products. The bookkeeper tracker that offers you an easy way to keep a record of your expenses and the revenue and have an understanding what's going on with your business. And I also offer for those that's trying to start. It doesn't necessarily have to be like in accounting, but those that would like to have a business plan or would like to do it themselves. Then I offer that as well, a template that has about 58 pages with all the sections of a business plan. And there are some notations and guides what allows you to just input the information in there. So when you are starting a business and you like to present yourself, then there's something that you can do and it's customizable to each business.
Nice. That's awesome. I'm looking at it on the second screen. Like I know you sent it earlier, and I'm like, oh, this is great. Um, so I am thrilled. We will we'll link it in the notes, and then it's also available at your website, so jacksonbookkeepingaccounting.com.
Yes, and I have also on those are the links on my Instagram, which is at Jackson Bookkeeping, and also on Facebook as well.
Okay, so our goal for today, I think, was journal entry, like getting a sense of what's going on with like gusto and gusto mapping. Um,
Yeah, one of the things that I after I ran the reports, the profit and loss, I noticed that some of the employee benefits accounts that I created were negative, like the employee life insurance had a negative balance to it, and some months. So I was like, okay, I just want to make sure that the chart of accounts are properly set up because that makes a difference.
yeah. So we'll start with employee life. This sounds like it's an expense account, or it's a benefit, right? So the employees, they some money comes out of their paycheck to go towards the life insurance.
When I went over one of the videos that you suggested, it's almost like less is better.
Yeah.
um, and I noticed I was going over two reports, the payroll journal summary, but also the what they call the cash requirements report. But on the report journal, I noticed that only the company was contributing to the 401k
Okay.
and also paying for the employer's retirement. But like you say, everything else was coming out of the employees' pay. So I was wondering if I even need to journal entry those. Like the owners also pay for health insurance and dental, Aflac. So I was wondering if I need to add those because that's what Gusto did because I mapped it that way.
Yeah. Like I think it's fine that Gusto has that stuff in there. If the employees don't contribute anything, then it's all going to be an expense to the business. So
Okay.
you would map it to benefit expense or whatever is the expense that makes the most sense for you. Let me see if I can log into my Gusto.
Because in case you need, I did downloaded those two that I just mentioned
Okay,
for a month if needed.
we might. Um,
Mhm.
so let me go into the app directory and then we'll find an app. We'll find QuickBooks. I don't have these benefits. So some of the stuff may not show up
Okay.
on my stuff, but um if we go down here,
For example, like vacation pay, they had that. And I think they have bonus as well in a
okay.
different that was during the December of 2022.
So for these things, if they don't want to track vacation pay separate, and most business owners don't, I
Okay,
just put it into uh whatever account the payroll expense is going into. And then
okay,
I would put the benefits into whatever account that's going into, unless I'm deducting something or holding something back from someone's payroll.
okay,
So if there's situations where it's coming out of their payroll, then I put it all in the liability account so that I can make sure that I've kept track of everything. But
mhm,
if it's just money that the company is paying, I map these things to like whatever the appropriate expense account is.
okay.
So what's one of the ones that you're struggling with? We can talk through it.
Um, I'm struggling with the expense that comes for the guideline traditional 401k. Um, because they have the life insurance, accidental life insurance, and the owners receive that. So I'm kind of confused on that.
Okay, so I got lost. 401k dental or life insurance. I need a place to start.
So we can start with the guideline expense, traditional 401k,
Okay,
contribution.
so there's 401k money. In the 401k, is it 100% coming out of the company or does the employee provide any money to the 401k?
The employee provide money to the 401k.
Okay, so it's employee and employer.
Yes.
So this is payroll deduction and the employer is a business expense. So we're like, okay. So then we have the journal entry. Um, journal entry. Gross wages, we'll say that they're $500. And then
Mhm.
um, taxes withheld will make them $50. And 401k withheld will make it $10. And then net pay should be this minus this minus this. Um, net pay, which is um okay. So I'm gonna say description and then dollars, uh accounts. Okay, so the description accounts are basically the same thing. Uh
Okay.
you end up with this being a debit, this a debit, uh no, taxes withheld is credit, and then a credit, and then a credit. And the net pay is really the business checking account. So this money that we've withheld from the employees, we have to set it aside in the liability account. Um, So the liability accounts right now have these balances. I'm gonna unhighlight them. And so what you're experiencing is one of these things is going into the negative, and you're like, that's not right. Um, so I'm like, okay, well, we got to talk about like how does the money like get turned into wherever it needs to go? Um, Gusto takes money for taxes. So what that means is that they take out um the taxes withheld, which is the liability account that
Mhm.
gets a debit, and then the checking gets a credit. And when they do this, this cancels out this. So that part feels good. And then of course this is just the running balance. Um, so now we're left with this 401k, and the 401k is weirder because Gusto's not taking the money. The business owner turns in the money and they add their own money to it. And so when it comes through bank feeds,
Mhm.
you can split it and you can say this money that's come through bank feeds, it's going to be some of it, some of the money goes to the liability account and some of the money goes to the expense account. Or you can make a journal entry and then just match it in bank feeds. You could, does Gusto tell QuickBooks how much the 401k employer contribution is? Because sometimes
Yeah,
okay,
I was going to, like, for example, I had a journal entry from Gospel Up
yeah,
and the guidelines tradition 401k. So the way they did it is a debit, and I don't know if I put it in the right place, but the guideline traditional benefit company contribution. And also, then we have the employee retirement fee for the traditional contribution. So I'm like, I'm kind of confused. Because this is what I mapped
okay,
based on this, but I'm not sure if it's correct.
okay. Let's just talk through it. So number one, you got your wages going to the debit, taxes, and this is the employer tax, so that's good. Then there's the reimbursements. I personally would break apart the reimbursements into what kind. Like, is it
Oh,
telephone or office supplies or whatever? But like
yeah,
Gusto won't do that. Gusto just sends it over.
yeah.
Um, and so then line number four says, here's an expense to the company, and that's what the
Mhm.
memo says. That's fine. Line number five says expense to the company, memo matches, that's fine. Employee life insurance. So line number six, that says that the money got deducted from people's paychecks.
Mhm.
Um, or at least it's a liability, so I'm assuming it got deducted. Um, and then the employee benefits, owners, accidental medical, um, retirement medical insurance. So okay, hold on.
'Cause, yeah, I don't even know if I need this here.
Well, I mean, you got to get your debits and credits to match. And when I put stuff in the liability account, it's because I'm keeping track of how much money that I've taken from people's checks or money that I need to remember to turn in. And
Okay.
so if this money, it's got to be taken from people's checks because the only part of this that is a company contribution is these things. So these will have like buddy liability accounts or matching liability accounts. But
Gotcha.
the extra stuff is the stuff that came out of people's paychecks. And so definitely those should appear. So I'm wondering, okay, so this number and this number matches. So what's being said here, like, is Gusto is like, hey, QuickBooks, just want to let you know that there's a business expense. And then oh, it is not paid yet, so we're gonna put it over here in the liabilities. And when it gets paid, you'll pick the
Mhm.
liability account. Is it the same account? Are these both expense accounts? Employee benefits and employee benefits?
Employee benefits, I feel like this. Yeah, because I think I changed it because I had this insurance. I had expense, payroll expense instead of being expense insurance. And I changed it, but I'm still negative still, even
I
with this one.
Yeah, what I'm asking though, is if they're set up as expense accounts, because I feel like line number 9 should be set up as a liability account, but I can't tell. Can you click on line number 9? And then when you click the account drop down to the right, it'll say what kind of account it is. Um, so it's a sub account of it seems like this
Oh,
is an expense account, but it should be
I,
like a liability.
I put it under employee benefits, a sub account of employee benefits.
And is the employee benefits account a liability account or an expense account?
I think I did it as an expense account.
I think so too.
I
So,
can, do you want me to go to chart of accounts or just leave it?
well, let's go ahead. I want you to fix it, but you can fix it later. Really, what's happening is that this is increasing the expense by 300, and
Mhm,
this is decreasing the expense by 300.
mhm.
So that's messing you up. It's like no expense is happening, but you know the
Gotcha.
expense is happening.
Yes, true.
Um, do you want to go to the section where you're seeing the negative? And maybe we can work backwards and see like why does the negative appear?
Yeah, open up the reports for you. It's right here. I have that one and
Okay.
this one.
Okay. So we've got this and it's a negative. So let's go ahead and click on the negative. And sometimes it just helps to look at it and we can learn something. Can you collapse if you click the 3 lines next to the business name, the gray bar goes away, making it so we can see more of the screen.
The
Um,
great, but it's talking about here.
yep. Okay, so these are all negatives. So
Mhm.
scroll up and see if there's ever a positive. Nope, it's just 100% negatives. So, which is fine. It's I mean, it's not fine, right? But I bet if you click on any one of these journal entries, you're
Uh,
gonna see that you were probably intending to make a liability, and instead you said increase my expense and decrease my expense, but you made it two different accounts. So instead of
um,
turning into 0, this one got big and that one got small. The fix is to change the account type from an expense account to a liability account.
Gotcha.
In the like the kind of way to know it is at some point you knew to write benefit liabilities, but then just had an off day and didn't realize that you didn't pick the liability for the account. So kind
Wow.
of in the flow, you're like, increase my expense, increase my liability. Later, when this money gets paid out to pay for the insurance, you'll
Mhm.
decrease the checking account and you'll decrease the liability. If yes, that's fine. And if no, then you can say, I want to explain differently. Or you can say, when I'm not on the hot seat, I'm sure it'll make sense. But right now,
This one, I did got it that I agree that perhaps the detail type is maybe wrong. I agree with that for sure.
yeah.
Because that's why I was trying to fix the other ones. But for some reason, I don't know if I got I'm too detailed, and then sometimes I trying to add too many. You know how it's like you have too many folders.
Yes.
Like I was trying to add too many sub accounts.
Yeah.
Maybe I don't need to do all that.
No, maybe not. I mean, you definitely want to set up your liability account so you can track. Um, we have this money that we've held from people's paychecks, and later when we turn the money in, to the 401(k) company or the insurance company or whatever, we can mark that off. Um,
We were talking about the insurance, and I'm presuming that would be the same situation.
Probably, yeah. So when we look at
Oh,
this, it, there's
I
this
don't
journal
know.
entry for 303. So the expense, what's weird is the expense is $163 and the journal entry is for 300. And I'm like, why?
I
Um,
think that's for something else because
oh,
this is
okay.
the owners, the shareholders, this goes to them, not to the other employees.
Yeah.
Um,
Okay.
so I
This
think it's in the good place.
Yeah, I mean the whole thing, like the account is all the owner's medical, but I'm wondering if the 303 entry is not only in the wrong spot, but too big. If
Oh, gotcha.
every, it seems like every payroll there's a 303, but that the health insurance is really $160 a month.
Oh, I gotcha.
Yeah. So
Mm,
I think you want your journal entry to go to the liability account. And then when it gets paid, you can relieve the liability. But I think also Gusto might just be set up to run it every single time instead of once a month.
already. So my
There,
enthusiasm.
there are just days where you look at QuickBooks and you're like, I don't know what's happening here. And
Um, um, can I share one last thing with you? Because I know we are,
yeah, yeah, whatever you'd like to share.
so I was, before I did another client that was a little more simpler, but I
Yeah,
was basing more on this is the reimbursement that is shared between the shareholders.
yeah,
And I was doing a journal entry where, okay, as long as I'm matching the direct deposit and matching the reimbursement, but then as I'm going down, the only benefits they have is let me go down so I can see it. It was right here. And I noticed there's no contribution here or here, so well, maybe I don't need to record those. But then the 401(k), there are company contributions to it.
you need to record both. And the reason for it is the ones even without the company contribution, money gets deducted from people's paychecks. So if
Okay,
you don't record it, your debits and credits don't balance. So
okay,
that's why you have to. The ones with company contribution, that just means that it's an extra line on your journal entry.
okay,
And there's lots of ways to approach it. Like with this stuff, you'll see, like, depending on who I'm talking to, I'll explain it differently and have a different method. You know what you're looking for when you're done. You know your expenses should total the company expense, and you know your liability should be zero, or just the last payroll. So
mhm,
sometimes it just takes spending a few minutes. I do like you saw in Google Sheets where I'll type it out and I'll cross things out. I'll be like, okay, this is how I keep track of it. And then when the money comes out of the checking account, these things turn into zero. Because it's just faster for me than to type up a bunch of journal entries and check them. But
gotcha.
whatever makes the most sense to you, you can um you can put your company contributions in the liability account, or you can tell QuickBooks it's not helping you to track them that way, and you would rather track it when it comes out of the bank account. But the employee deductions, those have to be tracked because otherwise you'll just never get your numbers to balance.
Okay.
Any other um
I
anything?
have several, but
Okay. Well, at
this
least
will be another time.
yeah. I mean, this got us through some really good stuff.
Yeah, but it was good. It did make sense. I don't know if maybe I overthinking or I was just like, sometimes trying to get things in a certain deadline and the over guessing yourself.
Yeah, that happens a lot. I would take it slowly and feel free to make as much detail as you want because you can collapse and shrink it up, so you can always have the simplified version and the detailed version. So
Hmm.
whatever makes sense. Really, like your biggest stuck point is just stuff is not going into the liability account. Once you
Hmm.
get it going to there, then you can, cancel stuff out when the money comes out of the bank account. And then I think
Okay.
you'll be fine.
Well, I appreciate you.
Cool.
All
Well,
right.
thank
I
you for doing
appreciate you.
this. Okay.
Thank you.
Okay. Bye-bye.
Bye bye.